All right, how we doing today? I hope you are doing well. It was a beautiful day here in the city. Just got through eating a fruit bowl. Need to eat something. So thank you to my daughter who fixed me some fruit this morning, or cut me up some fruit, and have to do that in order to take my medication. And so some mornings, most mornings, just getting, some Cheerios, some dry Cheerios to eat to start the day off. So fruit is definitely a good place. So, Brother Juan, why are you always talking about food? Well, I like food. I like food that's good for you, and I like food that's not good for you. So food is always good. Well, you just saw the topic that we're going to talk about today. So let's go ahead and jump in it, and I won't bore you. We're talking about food. As I'm talking, I'm thinking about what's for dinner today. So that is definitely on my mind. We're going to talk about 5 financial mistakes solopreneurs make when starting a business. A lot of people that I come in contact with have recently started a business probably within the past 2 years, maybe 2.5 years. So even the ones that have been in business more than a year, they're still kind of new and fresh. And so I kind of want to focus on new business owners, new entrepreneurs, and this will transition to more than just my niche coaches, consultants, course creators, and really just help business owners in general, but especially those who are in my niche. And let me not forget my introductions. I am Juan P. Barrientos II. AKA Brother Juan. I'm the owner of Next Step Financial Partners, Tax and Accounting. I help Christian life coaches, consultants, course creators, solopreneurs increase revenue by an average of 30% with financial accounting and tax planning so that you can empower more of your clients to achieve their goals, grow your business, and fulfill your purpose. Biz Talk with Brother Juan, and now Tax Talk with Brother Juan is part of my effort to help you navigate your business to being more profitable and fulfill our vision here at Next Step of creating wealth for future generations. And so also with that tax talk, we started that yesterday. I didn't announce it, just went live. And so we're going to do tax talk on Wednesdays at 1 p.m. in addition to biz talk on Tuesdays and Thursdays at 9 a.m. And so look forward to doing that again next week, Tuesday, Wednesday, and Thursday, broadcasting live. And so even if you can't watch live, definitely check out the replay, which will be on my personal page as well as the business page for Next Step Financial Partners. So those videos are available on there too. Oh, and YouTube, just search for Biz Talk with Brother Juan. Should be able to find my YouTube channel with no problem. Definitely like, share, and subscribe to YouTube. Definitely need more subscribers there so that I can get a personalized URL address for that YouTube page. And so looking forward to doing that. All right, so let's go ahead and jump into it. 5 financial mistakes solopreneurs make when starting a business. So first of all, failing to accurately track expenditures. Failing to accurately track expenditures. It is estimated that 60% of Americans don't budget at all. And when you translate that into business, it can cause some serious issues when trying to track your expenses. And I understand when you're just starting out, you can keep a mental picture of those few expenses that you have. Your bank statement is not very long as far as what you're paying out. But over time, as you begin to add software, as you begin to add other things to your business, your expenses begin to multiply, and especially those things that you're paying on a weekly and monthly basis, that bank statement can get long, and it's harder to keep track of things in your head. Even if you take the time each and every month to put all your expenses in a spreadsheet, that's great. But today with software, accounting software, I would definitely utilize that. A free accounting software, Wave app, is a good place to get started. But with my bookkeeping clients, of course, we use QuickBooks. But Wave app is somewhere to get started because you want to be able to have access to that information as quick as possible. And the only way to do that is to do your accounting on a daily, weekly, monthly basis to keep track of all that so that you can accurately track your expenditures. The second thing the second financial mistake solopreneurs make when starting a business is taking on unnecessary overhead. Knowing where your money is going is vital for identifying and eliminating unnecessary overhead that could be cutting into your profit margin. I know one of the posts that we just posted on Instagram and on the page for Next Step Financial Partners dealt with checking your bank account is not a solution for managing your finances. Well, I got the money in the bank, so let me go ahead and spend it, right? And so we have to be more strategic. Oftentimes we'll see that money in the bank and then we'll go just spend it, and we'll spend it on stuff we don't necessarily need. So taking that time to analyze, do I really need this? How is it going to benefit me? What's the ROI, return on investment, that this asset or this purchase is going to give me? And so again, before making any purchase or any investment in your business, again, consider whether you actually need it. All right. The third thing is not having an invoice system. Knowing you'll get paid is a top priority for most solopreneurs, but many fail to address the how in this equation. What system have you set in place in order to get paid? And of course, you want to make it as easy for people as possible, but at the same time, you need to be able to track how your money is coming into the business. And so if you, even if you have a payment processor, I would suggest having a backup payment processor. Of course, those of you who have dealt with me, you know that I invoice with Square. And it's an easy way to keep track of invoices. But the website runs with PayPal, and then our software, if you've ever been billed through one of the software, that's operated with Stripe. So I know where things are coming from by knowing what payment processors use, and then those are all backup. So if Square ever goes down, I got PayPal and Stripe. If PayPal goes down, I can add Stripe to the website, and I still have Square. If Stripe goes down, then again, I can use PayPal and Square for the same thing. I can use Stripe. But for the most part, I invoice through Square. And that's, again, the easy way to keep track of the money that is coming into the business. So if you are taking cash, even when we take cash payments, we mark the cash payment through Square. So if you're doing Cash App, Zelle, Apple Pay, if you're doing all these different things to get money from your customers, get money from your clients, then it becomes harder to keep track. All right. And so you should think about having a systematic way to collect money from clients and customers and to record those transactions. All right. So the fourth financial mistake solopreneurs make when starting a business is not adjusting your lifestyle. Actually, most people that I come in contact with start off their business as a side thing, a side hustle, or they have income coming in where they don't necessarily need the business income. But if you are jumping all in, it's, being a solopreneur is not really a quick path to becoming rich. And so leaving that security of a 9-to-5 job means initially you'll be taking a pay cut, right? You don't initially make as much in your business as you could getting paid, but you go into business for the long-term benefits and not the short-term, right? So you are willing to do now and give up now things that most people won't give up, so that you can have most things that most things that people don't have and take advantage of in the future, right? It's an investment in yourself, an investment in your family, an investment in your future. And so if you don't adjust your personal expenses accordingly, you can find yourself again in serious trouble. The fact is that most businesses fail. It is estimated 29% of business startups fail because they run out of cash. That is a cash flow issue, cash management issue, not keeping track of it. So you don't even know how much you're making. And then you wake up, look up one day, you're making money, but you're not really being profitable. Okay. So that's why it's so important to keep up with those expenditures. So the first thing that we talked about. And that's the second common thing, running out of cash. The first thing is a lack of market need, but you have to adjust your lifestyle to the money that you have coming in. And so it's good to really look at your cash flow as a whole, see where you have been in the past, and then make an adjustment in your personal life based on your average revenue per month, your average profit per month, I should say, not just the revenue. And even knowing how much revenue, when your revenue comes in, for every dollar you make, how much do you spend for expenses? And so that can help you determine how much you can take out of your business every week, every other week, every month, and still have the cash on hand to cover expenses as it come in. All right, by looking at your historical data. This is why Brother Juan preaches bookkeeping is foundational. A lot of your business questions can be answered through your numbers, but if you're not keeping track of your numbers, it's hard to make those strategic decisions, wise decisions, because then you're just guessing, and you don't want to just guess. All right, the fifth financial mistake solopreneurs make when starting a business. Those of you who don't know, I have a speech impediment. So when I try to talk fast, I'll start stuttering. Failing to optimize and add new revenue streams. Failure to optimize and add new revenue streams. So sending invoice is a key part of making a profit, but successful entrepreneurs, successful solopreneurs have to take things further and look at active ways to optimize their revenue streams and then regularly add new ones to the mix, right? So how do we optimize revenue streams? Again, starting off with having your system in place on how you get paid. So it's just not all over the place. It's not everywhere, right? That's one way. You can also optimize your revenue stream in several other ways, but also adding new ones to the mix. And so evaluating the services that you offer is one thing. What do you actually offer with these services? Think about how do you go above and beyond with your clients already, with your customers already? And why don't you add that to the mix as well and add more value to the packages that you present, such as email support. You don't have it listed as your package, but you get emails all the time for clients. So why don't you go ahead and just list that to your package? Now your package has more value assigned to it because you're not just providing a service, you offer email support as part of your package. You're doing it anyway, so why not just put it in the package and make it conscious and purposeful and intentional and add value to what you're already doing. Looking for new ways. A lot of times when you speak to your clients on a regular basis, common issues, common problems come up. And so you can look at other ways or other services that you can add in addition to what you do that are complementary and again, go right in hand with what you're already doing, right? And so as a solopreneur, you have to constantly, again, optimize what you're already doing, as well as look at new revenue streams that you can add. All right, single person companies, again, like all businesses, need a great ideal and a bit of burning the midnight oil in order to gain traction. It takes work, it takes energy, it takes effort. But if you want to ensure a lasting future for your company, you'll need to consider how you manage your financial responsibility as well. It's a part of running business. And by planning for a smart financial future from day one, you'll be able to set up the right systems and processes for a lasting profitability as you grow. Also, it'll reduce quite a bit of stress, knowing how you do business, how you operate business, knowing what all the pieces of the puzzle are and how they flow together from the get-go, and really thinking about that. And so if you can utilize a strategic partner for your bookkeeping, your consulting, or consulting in your biz, let's talk about your biz and the services that we offer here at Next Step Financial Partners. See if we're a great fit to work together. I invite you to book a free 15-minute biz strategy session with myself. There is a link associated with this video. So definitely reach out to us. If any questions, feel free to ask any questions. And also, if you haven't already received a copy of the Tax Time Guide, it is a guide for the underemployed as well as the self-employed. There is articles in there. There is, it's actually a 3-in-1 guide. The self-employment guide is in there, and then 5 loopholes, 5 tax loopholes that you can take advantage of as being self-employed. How to choose a tax preparer. Again, it's a 20-page guide that I put together for taxpayers such as yourself. Whether you are underemployed or whether you're self-employed, you're going to find some useful information in there. And that is a free download. Link is associated with this video. All right, well, this is Brother Juan with Next Step Financial Partners. Thank you for tuning in to this edition of Biz Talk with Brother Juan. And again, today we talked about 5 financial mistakes solopreneurs make when starting a business. Look forward to seeing y'all next time. And again, remember Biz Talk with Brother Juan, Tuesday and Thursday, 9:00 a.m. Central Standard Time. And now Tax Talk with Brother Juan on Wednesdays at 1:00 p.m. Central Standard Time. Y'all have a blessed day, and we will see you next week. As I say at the church, if the Lord says the same, amen, because it's all up to him. Y'all have a blessed one, all right?